going to talk about BookMap again today. Now, this opportunity in LRCX is actually valid after it broke down. ITCI obviously just went flat, and it is what it is. What are you going to do? Caesar, it was gradually going up. So in principle, I think that would have been a winner, but let me see. So I'm trying to remember. Oh, it got close. It got close to two. So that would have been a winner. Wouldn't have been a Grand Slam run, but definitely that would have been a winner. But oh well. LRCX, that one did much more of what we were looking for. Just a nice setup. So it took a long time setting up over here where it was stuck at negative T1 and finally broke down. I like when this happens more because the longer it actually consolidates it before it breaks, usually those work out better. Okay, so I'm just talking about odds of success, not guarantees of success. So let's look at it on BookMap. So let's pull up BookMap and let's look closely at what happened. So here it is, right? And we also have it here in the background. Let me resize this so it doesn't take up the entire screen, but we can still see it. So here's the stock, LRCX. So here's that support at 80, 80, right? So there's 80 right there. Now that's just a tad, I think it was just a tad below T2, T1, sorry. So we had support right there. You can see it clearly on the screen. You can't miss it. That's a big, solid block of support. So we set the alert to let us know if it broke down to 79.90, if I remember correctly. So it went there at first, right? Then it pulled back. Then it resumed its move down. So on this move, I would most likely wait myself. I wouldn't jump that quickly myself. I would give it a little bit of time to see if there's really good follow through. But if you jumped in a little early, that's fine too. It's still valid, but based on today's action, I would probably wait a little bit. Then it starts to pull back and starts to go again. So you have this possible time to get in, somewhere around there, and you also have this, right? So if you get in here, your risk obviously has got to go up to there. If you get in here, your risk has to go up to here. Now the risk to reward potential is better on the lower entry, but it is what it is. All right, so we got that. So LRCX did trigger. I know I said it what the target would be, but I said I won't put it on there. But there it is. All right, so that was an opportunity. Now, even if I don't tell you about an opportunity, if you see that it actually matches up to the criteria, or it looks like it does, it looks pretty close. I mean, assuming you've been here for a little while, you should be able to recognize when something at least looks like it's in the neighborhood. Okay. Alrighty. So let's keep going over BookMap. Let me. Oh, actually, why did I take it away when I'm still talking about it? So that was all we had. We had a lot of potential alerts that didn't play out, and we had some trades that didn't work out anyway. So ITCI broke even. AVGO was a failure. Okay. That one did break down entirely. And Coinbase was all over the place, but it broke down too. Markets clearly have gone into a sell-off, so obviously that would pull stocks down. It would help stocks that are bearish, hurt stocks that are bullish. Some stocks, I'm sure, survived and continued to go up, but probably not a lot. All right. Now, the stocks that are most likely to keep going up on a day where the most of the U.S. market is going down would be Chinese stocks. Foreign stocks like Chinese stocks typically won't have as much of a connection to the U.S. markets. They'll tend to move more on their own because obviously their home country is where the business is being done. So Baidu actually had a good day. It went up. But that one showed up pretty late. That didn't show up until after 1 o'clock. So that was not something that we'd be looking for. Meta, let's see, that's a U.S. stock, of course. That didn't really go anywhere. Let's see, did JD.com? Yeah, JD.com is up as well. So it looks like the Chinese stocks moved up. It just took them a while to get on their runs. PD? Yeah, there you go. All right, so this was a Chinese stock day. Okay. Chinese stocks had a good trading session. They did well, but a lot of them took a while to show up. This one did show up early enough where that was possible. I just didn't see it. For some reason, it's not showing up on my scanner, but that one did show up early enough to take advantage of. As far as stocks going down, you know, there are stocks, for example, like a firm that was stuck inside the YCTO until we got about an hour into the session, then it breaks down. I never saw this one, but that was on this list, so I wasn't looking at that list, so that's why I missed it. But that was a decent move down. Um, so there were definitely opportunities. A lot of these showed up late, so if you didn't see them, don't worry about it. Nothing you can do. If it's turning a time of day where you usually don't make money, it's in your best interest not to look at it. So don't, if you see stocks that eventually went down, don't think too much about it. As I said, if this happens, right? If you have a market that just kind of falls apart and it takes a while for it to happen, it is what it is. You can't do anything. What are you going to do, right? You don't want to chase after it because you missed it. Never want to do that. All right. Okay. All right. So let's talk about BookMap. Now, there are two things that we talk a lot about the differences between fundamentals and technicals, right? When you're day trading, it's in your best interest to focus your attention on technicals. When you're not, it's actually in your best interest to focus on. When I say fundamentals, I don't mean like generic stuff. I mean true metrics like institutional buying activity, you know, analyzing valuation, profit projections, things like that. Like getting a sense for whether or not this is a stock that most likely larger players are going to buy. That's the way I look at it. I mean, I don't see any other way. So when I look at stocks, I look at it from the perspective of where I stand. So where I stand is not, I'm not Paul Tudor Jones. I'm not, um, you know, Larry Fink. Is that? Yeah, I always forget his name. The BlackRock guy. I'm not these people, right? These are people. I'm not J.P. Morgan. I'm not. Sorry, Jamie Dimon. I'm not these people. Okay, they're standing in very, very large influence positions, commanding large amounts of money. So therefore, them and their teams are sitting in a very different category than I am. So therefore, I have to think about where I stand and say, obviously, it doesn't make sense for me to think that I would want to depend on my own beliefs or my own conclusions about a company as the final, the final word. What I want to do is align what I'm thinking with what the larger scale players would do. I mean, the person who's going to make the most money as a retail trader or a smaller professional trader just basically means if you got anything under, if you have anything that's not greater than the tens of millions of dollars, then I would consider that smaller. If you're in the hundreds of millions of dollars, you're medium. If you're in the high hundreds and into the billions, you're on the lower end of the upper tier, right? The low end of the upper tier, not the high end, but the low end of it. So once you get into the billions, you're at the lower end, the very, very, very lower end of the upper tier. Um, so think of it like, I mean, the easiest way to think about net worth, Elon Musk, Jeff Bezos, right? If a person's worth $900 million, then that puts them on the very lowest rung of that echelon. So, I say I'm a billionaire, yeah, but if you got $1 billion, you're not that big of a deal. You are a big deal in terms of the world, but you're not a big deal in the world of billionaires. Okay? All right. Having said that, so what I'm basically saying is you can have money by any reasonable standard. Like if you're LeBron James, right? If you have LeBron James money, that type of money under your, what is he worth? Is he worth $1 billion? Actually, hold on, he might be worth $1 billion. I forgot. I don't usually check that. But let's see, what's his net worth? Oh, he is worth. Yeah, he should be. I was to say, there's no way he's not worth that much. All right, so LeBron James, never mind. Forget about his. He's got real. That's serious money, right? Forget about him. If you have, I'm trying to think of somebody else. Uh, let's see, Steph Curry. How much money does he have? He's got to be in the hundreds, I assume. 240. Okay, so Steph Curry's estimated net worth. Okay, so if you've got Steph Curry money, if you have that as assets under management, you still will be considered small, but you're big enough that actually you can move a market. Not a lot, but you can actually influence a stock price by trading size like that. So, um, but if you're in the tens of millions or less, you are definitely on the small side. It's not small in terms of reality to to the rest, to the majority of the world, but small in terms of the market itself, how big it really is. Okay, so if that's where you stand, and we all do here, including me, then what that means is this: you have to look at things. You have to look at things and say, I just want to be able to benefit from the creation, the movement that's created by the bigger players, because they're the ones who really set the trends, set the tone of the market, determine which way it goes, right? So now, Fergus, yeah, I remember Fergus. I haven't seen him in a long time, but so now, if that is the case, right, then all I have to do is look for things that I can identify that can tell me where a larger scale player is likely to act. And we can figure that out. Not perfectly, but we can figure out when it looks like these people have decided that they want to do something. Now, when we're day trading, it does not make sense to think about what is the future earnings forecast. Okay, people make the mistake of confusing the intraday trading environment with the totality of the market. And if you ever watched Neil deGrasse Tyson's version of the Cosmos miniseries, like his remake of it in the 2010s, he had this part where he showed a dog on a leash and him walking down on the beach. The dog's running from to and fro and looking at everything, and he's just going steadily in one direction. The leash is, he's holding the dog on a leash, so the dog can't get too far away from him. And what he was saying is that's the difference between weather and climate. Weather changes a lot. Climate has a pattern, which we already know, of course. But when you say it that way, it kind of makes more sense because we have, spring, summer, fall, winter, and other trends that occur in climate. But you also know that weather can be pretty erratic. Like from day to day, things can be pretty weird. Especially if you live in Chicago, right? Things can go from um, nice sunny day to cold, back to sunny, back to warm, then the cold. I mean, that's the Midwest for you, at least the lakes. That's the way it is around the lakes. It changes a lot. So, with that being said, the intraday trading environment is more like that. It's going to be erratic. It's not going to be as consistent as you may want. But if you look at it over time, larger scale patterns have to emerge. A lot of trends that occur over the longer term. Uh, oh, sorry. Okay. I knew I did ask this before. Sorry, I knew I asked this person this before because I was like, anyway, sorry, I just got distracted. Someone asked me the same question they asked me 3 months ago. All right, anyway, so um, most of the movement that you're going to see in a longer term trend tends to happen in the overnight. Okay, this is something that a lot of traders realize after a while. So when you look at the S&P, for example, a lot of the movement that accounts for the overall uptrend in the stock market, the indexes, a lot of that movement actually occurs overnight. It gaps higher, and then the rest of the day it kind of trades sideways. You have trending days too. So when you have really aggressive, sharp moves up in the market over, periods of time, chances are there are going to be a lot of days during those periods where you have intraday moves that are really big. But when you have a normal environment, most of the movement's overnight. So I remember back during the quantitative easing years, when back during the Bernanke then to Janet Yellen years, during that time, if you're looking at the futures markets for the E-mini S&P, for example, you would see a 5-point trading range during the day, and it would gap higher overnight. So, it would gap higher, then you go into the day and this goes neutral, then it gaps higher. That was the norm. So most of the moves occurred overnight, right? They were just gaps higher. And then during the day, nothing much was happening. So that was, of course, not a good environment to be a day trader in the futures markets if you're trading the E-mini, because it's barely moving. It's not doing much at all, right? That would be like the SPY moving in a 50 cents range every day, if you can imagine, because that's what it was doing, by the way, back then too. The SPY was like 50 cents movement a day, right? So all I'm trying to point out is when we're day trading, we don't want to focus on, we really don't want to focus our attention on the long-term trends, right? You really don't want to focus on the long-term trends of whatever you're looking at. Sometimes I would always focus on very short-term. If you're going to focus on any trends that last longer than a day, focus it on short-term, ones that just last for a few days, weeks, something like where there's something urgent happening that's really moving a stock. Like when CrowdStrike was coming down after the server crash thing or software crash, or maybe some stock has some good news where there's a potential buyer and it moves it up, like stuff like that. Okay, very short term. The longer term trends, you might think it would be logical to say, hey, the S&P always goes up over time, so let me just buy at the beginning of the day and sell at the end. Buy at the beginning and sell at the end. You might think that your returns are going to be awesome, but they're not. Because again, most of that movement usually occurs in the overnight. So you're missing out on it when the day starts. This is one of the reasons I hate trading indexes. One of the reasons why I don't understand. I'm not to be offensive. Some of you apparently have a decent approach to trading indexes with options, and that's fine. I'm not going to criticize you if it works. But for the most part, when I usually look at people's trading in the QQQ or the SPY, etc., I don't usually see winning traders. I usually see losing traders. To the point where I always wonder why focus on something that you clearly are not doing that well at, when you have all sorts of other opportunities that would be much easier to exploit. Sure, it's not a stock you are familiar with, whatever, but hey, if it's moving, it's moving. Make some money off of it. All right, having said that, so when we think about the intraday, if we can't focus on the bigger picture of why equity firms want to buy or sell a stock, if we can't focus on the longer term trends, what can we do? We have to focus on the intraday mechanics that move the stock price. And that's where BookMap comes in. Okay, BookMap is the only tool, or anything similar to it, such as the level 2, but if you have the whole level 2, which I don't subscribe to the entire thing, but if you could see the entire order book, that's basically what this is, but this is a much more effective way of communicating it because you can see the history of where the levels have been. I prefer this one by far. Like, in other words, I do, again, say this many times, when I was doing that manually, drawing lines on charts where I saw a big buy order or sell order, I was moving up and down the price ladder. That takes a while. It's a lot easier just to pull up a stock and you see the history and the depth and everything automatically. This is light years ahead of anything that we had when I started. Like, this is so much better, right? It's much easier to notice, exactly. So, that being said, when I look at BookMap, it tells me where the bigger activity that's waiting to get filled is. And I can look at that and say, okay, I don't have to ask myself what's going to happen if more shares are sold than there are looking to buy. We all know what's going to happen. If the buy order says a total of 100,000 shares looking to buy, and the sellers say, well, yeah, we want to sell 300,000 shares, we're selling it now, take it or leave it, then you know that order, that 200,000 shares is going to get taken out by the 300,000 that are selling. They're going to literally push it aside, right? That's the way things work. If you put more weight on one side of the scale or another than the other, then it tips the scale. That's what's happening here. The scale is getting tipped where there's more sellers than buyers, and it pushes through. That's the only reason why stocks will move through support or resistance. So wherever the buying is waiting, that is actual support. You don't want to trust the chart by itself, a price chart by itself, to identify support or resistance. Okay, this is what it's not. It's the combination of them, Alex. It's the cumulative of all sellers. So it could be one person, it could be many. We don't know, but we just know how many. That's all we really need to know. So in short, when I look at a regular price chart, I can see where price is slowing down, but that doesn't necessarily mean there's a price level there. Usually there is, but not enough that I would trust any price chart. So when I see people drawing lines on charts and saying that's support and that's resistance, I'm like, well, I get what you're saying, but isn't it better to actually see the thing that's causing it rather than guess? In other words, if the market breaks through a support area, it's gone, then it goes up for a second and it starts to go back down. Do I really, it goes up, let's say substantially, then comes back down. If that support's no longer there and I'm thinking, oh, there was a floor there before, so it's going to be there again. No. The only way it stops at the floor is if the floor is still there. If the floor has been eliminated, I want to know that it's no longer there. Just like if I'm walking up the stairs and then a stair has been removed and I'm going back down, I do want to be able to see that that stair is missing. I don't want to assume that it's there, because if I assume that it's there, guess what? I want to step right through that hole, right? So it's better to know than not to know. So these are the mechanics of price movement, guys. It's simply put, if you have more selling than buying, if you have more people selling at market than you have bids looking to buy at market or to buy, then the price is going to go through. And it's going to keep going through until you reach a point where the balance between buyers and sellers equals out. And if it shifts in favor of there's more demand to buy than there is demand to sell, then of course things will move back up. Now, all this tracker here on the CVD does is it looks at the cumulative difference between buying pressure and selling pressure. What it doesn't do is look at the relative value of the bids versus offers. In other words, say it a different way, it's possible that the CVD can go down, but the stock is going up. Why? Because if they're really strong bids that are supporting the market as it goes up, they're just trailing behind the market and they're putting big bids, right? Big bids that are under the market supporting it, right? As the price goes up. If that is the case, right? If that is the case, then what that means is that even though you might have more net selling at market than buying it at market, even though that might be true, right? Even though that might be true, that does not mean that the price has to go um, down. So as I said, if you picture the analogy of a bunch of kindergarten kids pushing a vehicle down a steep hill and a bunch of NFL linebackers pushing on the other side, it's not that the NFL linebackers are not strong, but if the car is already going against them and you have all these kids pushing it, the net is the kids are going to be stronger because of gravity, so therefore it pushes the car in that direction, right? So the pushback by the NFL linebackers is really strong. They are actually stronger, but it's the weight of the car, the mass of the car and the fact it's on a hill, that's carrying the day. So in short, what we're looking for is a picture like this, where stock's going down, the VWAP of course will be going down, and the volume is going in that direction. We want to see everything is in sync, because when it's in sync, we tend to get much better movement. When it's not, we tend to get more difficult or unpredictable movement. Okay, so a good situation would be an overwhelming amount of selling that's overwhelming all the bids and moving us through. Right, that's what we want. That's what we really want. Or an overwhelming amount of buyers, overwhelming offers, and moving the stock up. Those are our best case scenarios. That means that if I'm looking to trade stocks and get the best results possible, I should be particular about which stocks we look at. I should be waiting for the ones that have the right profile. Now, I've been focusing you guys' attention on looking at BookMap, where I look at it every time, check to see what things look like, and tell you, okay, this one looks really solid, this one doesn't. I'm doing that because I want you to internalize this lesson that you're going to get better results when you can see which way things are biased. Now, if we take this chart, which currently is set in a basic manner, right? I have a basic chart here. If I decide that I want to see a little more detail, right, I can add some more tools. One of the tools I can add is the volume dots. Now, where are they? The volume dots are just a dot that represents the net difference between buying and selling. You can change the settings to make it look different. You can go, I'm trying to remember where to go. Hold on for a second. You go to, no, it's not here. How do you, yeah, okay, it's in here. So I go here, volume dots, and I could say total volume 2D. There you go. All right, so now I got a slightly different looking dot. Now these dots have a pie chart, so I can see if it's all red nearly or is it somewhat. So this dot here that I'm circling, let me hide the heat map so you can see it a lot more clearly. This dot right here, right? That dot is, I don't know, maybe 66% selling versus 33% buying, something like that. So here it is. I can see the pie chart display, and that tells me basically how much of each thing I'm getting. Now you might be, and if the dot's bigger, it means more there. If the dot's smaller, it means less there. Now you might be wondering, well, is this in any way useful? Well, this one is 100% selling. Do you see that? Let me zoom in. Sorry. It's going to change when I zoom in, just to be clear. Just a little bit. But you see that? That's an all red dot. Look below. What do you see? When the market opened, we had a selling imbalance on LRCX, and apparently it was completely on the selling side, um, which is unusual. But I mean, obviously someone has to buy. But what this is basically saying is that you basically have pretty much no. There's pretty much. Okay, sorry. So there is no, apparently there were no market orders to buy, but all market orders to sell. I've never seen, I mean, it's probably not exactly 100%, but it's so close that you might as well call it that. So this is literally all selling right at the start. You're not going to see a lot of times where this happens. But, sorry, hold on for 1 second. Sorry guys, give me 1 second. Okay, sorry about that. So let's add the heat map back to here. Now notice that I'm not zoomed out, I'm actually zoomed in. Normally we want to be zoomed out, but I'm just going to show you for a second that there are two things I need to know. Okay, I need to know what the big picture is. I always want to know where the big levels are in advance. I want to know what the big picture is down here. And then after I know that, if I want to, I can dial it in and look at specific things that are happening at a smaller level, at a smaller granularity. So here I have a bookmap chart at the top for LRCX. Let me add another one at the bottom for LRCX. I just want to point this out, okay? Just want to show you quickly what we're doing here. Okay, so I'm going to hide this. I can't hide that column. I want to scrunch this one together at the bottom. Okay, this is not the only way you can do this, but well, actually, you know what? Let me do it this way. Okay, that's a little better. All right. So this is my big picture on the right, or sorry, the left. Sorry, that's my big picture. Then on the right, I have the small picture. Now, what I want to do with the small picture is, sorry, let me get out. Let me get out of this. So in the small picture, I already get what's going on overall, but if I'm trying to time my entries better, I might want to zoom in just a tad to see what's actually happening on a smaller scale. So in other words, I can see levels that are appearing. So if I scroll over, for example, I can see, all right, this went up to some resistance, that went down to some support. These are not necessarily big trading levels. There's a little level there. Okay, there are some supports coming in there, but it turned around, right? I can see that. Let me add some more data now so we can see the rest of the chart. But what I'm trying to do, Lana, you have to contact them and ask them to add BookMap to your Thinkorswim. They're going to ask you if you want the free version or the subscription. Say you want the subscription, and after that, they're going to debit $40 a month out of your account. Okay, so I'm not zoomed out, kind of zoomed in, right? I'm seeing things at a smaller scale, a lot smaller scale. I have the big picture on my left because there's no other way for me to do it. I just want to see where the big levels are. And then I have this here where I can see, oops, I didn't mean to do that, where I can see what's happening. This is going to take me a while to get this over. Hold on. Okay. But I'm actually seeing things on a more nuanced level. So for example, here, this is a great example. You see this? Price comes down right to the support at 80.01, starts to move back up, right? The difference between the free and the paid version is one is paid and the other is free, and the paid version has the full ability to look at any stock you want. Okay, so the free version, you only look at two stocks, whatever two stocks they give you. This allows you to view whatever stock is available. So if I am trading this stock today, based on what you see here, which direction should we be trading? We should be short, right? We see The bias is down. The price is down. Right? So if we see the price is going down, the CVD is negative, the VWAP is down, then we want to look for opportunities to sell. Now, let me ask you guys a question. Why do you think I like to look for a move, a pullback, and resumption? Why? What's the reason why? Sure. What's the main reason that I say I look for the setup? Why do I look for the setup? What does it allow me to do? Thank you. Entry stop loss. Thank you, Steve. I know where to get out, and I have a place to get in. That's what I'm looking for. So yes, I'm looking for the continuation of the trend. Yes, I am. That's for sure. And I am looking for the overall trend to keep going. I'm looking for where the support is, et cetera, et cetera. But in order for me to initiate a trade, I need something that I can reference as an anchor point for my trade. I need something that anchors my trade so I know when I need to get out. So if you were trying to if you were going through a maze, right? A labyrinth, right? You're going through that and you're trying to keep track of where you've been. You put markers somewhere on the wall. You say I was already here, so you know if you're going in circles, right? That's a simple solution, right? You're basically referencing something to know if things are actually moving along. BookMap is both. It's everything. It's time and sales as well. This is time and sales data down here. So when I look at this, right, I'm using pullbacks as a reference point to let me know if if the trend's still going in the right direction, or if I'm redoubling what I've already done. In other words, is it going back to where it's already been, or is it paving new ground? If we're going to make money, it has to keep moving. So we have to have some place of reference to tell us if we're going anywhere or not. The stop loss is basically where we exit when it does not appear that things are still progressing in a clear manner. When things start to look uncertain and we start to go in the other direction, it's in our best interest to get out. So, how can I use that knowledge in my favor? Well, BookMap is not based on 1 minute or 2 minutes or 3 minutes. By the way, the reason why that dot suddenly got smaller because it's relative in size. The closing bell has a much larger volume than the opening. So that dot made all the others suddenly become obsolete, minuscule. Anyway, so if I'm trading and I have a place to enter that's based on where I need to exit, I'm looking at things in their totality. I'm trying to figure out if things are looking like they're proceeding or not, and I don't want to leave it up to chance. I don't want it to be arbitrary. Okay, so now I've got that. How can I do that? Well, I can see it on this chart, but what's interesting is what you can't see on this chart because we're zoomed out is that almost every time you see a pullback, if you zoom in, you'll actually see almost every single time the pullback goes to an area of resistance on the trend down, it taps it and then comes right back down, or it goes a little bit through it, then comes back down. Almost every time. So I would have to be zoomed in to see that. But if I'm too zoomed in, I don't see the big picture. So I would have to have basically two. But you see this right here. Okay. This was a great example. This is support, but we're looking for resistance. So there's some resistance there. Okay. This one went over some support and then fell through. There you go. See that one? There is resistance right there. Price goes down. to a little support area, goes back up to resistance, turns back down again. Now it's a little fuzzy looking because you have so many trades. You notice like it looks really fuzzy on this chart because there's a lot of trades that are hovering around the price. A lot of stocks will look a lot clearer than that. So it'll actually look much clearer. You'll see like a hard line. Stock goes right to it, boom, turns around. Okay? So here it is again. Resistance area goes up, boom, hits it, comes back down. There's a VWAP up above. What time was this at? How come these are not synchronized? Oh, there they are. That occurred at 9:51. So you see the cursor, the horizontal line on the left-hand side. I'm moving it around, right? Obviously, it moves less because it's looking at more time. But I want you to notice, if you were looking at that chart on the left when that happened, you don't really see clearly what is the culprit. But when you're zoomed in, you can. So what we're trying to do is look for pullbacks that go up to little areas of resistance and wait and see if they turn around. Because we know we want to sell. That's a given. We know we want to short sell because we see which direction the bias is in. But the best time to do it is when the market pulls back, hits a barrier. In this case, it took it out, but that takes out some of the momentum that was there. So when the stock turns around and starts to go back down, which we could say in principle starts over here, but we can wait until it really looks like it's going down over here. We can say, okay, here I can sell, or here. Okay, that's my choice, but my stop loss can now be a lot closer because I can see the minuscule action. Now, if you're doing this, you're going to be doing a lot more trades, which is fine. Now, the reason I don't focus on training all the time on this is because in order to do it, you have to have BookMap. And there's no way I'm going to be able to look at this all day and say, okay, look, buy here, sell there, buy. You got to actually pay your money to get BookMap and use it. But this is what's actually happening at the micro scale. You're going to see a lot of these. Not always, but you're going to see a lot of these. Right? So here's the start of the day. We just sold off, went through some support, went through. Then it pulls back a little bit. Doesn't really hit anything. Goes to a little resistance there. Turns around. It's getting really clustered in. And, it hits the support. Finally, it breaks the support. Notice that the sellers start to pack their orders above. Then it goes up again, a lot more. But then it starts to get up to here. Then it starts to come down. So it looks like we're maybe going to come down, but it's much more pronounced over here. Come back, hit, go sideways for a while, then it starts to collapse. So this was the first actual time if you had the right tool in front of you. So by 9:57, which is, you see where my cursor is on the left, that's 9:57. That's pretty early in the move, right? That'll be the first opportunity. Now, obviously, I would have to have seen this stock already, which I may not have. Okay, so let's be upfront. Like, we don't know if we would have noticed the stock or not, but if it happened to be on my screen and I see it, this allows me to get in much tighter, much sooner. I don't have to risk as much, right? I can actually risk 20 cents and still be good because I'm basing on the pullback, right? Pullback and where I think it can go to. So therefore, that's fair. And if I wait until it's broken through this support, which happens over here at 12:59, okay, let's go to 12:59, right? Okay, now you see the action. There's the support, right? We can see the support. It's flirting with it. That line here, it goes down to it, moves back, comes back down. Another support shows up. Right, then it comes back down, takes that one out, goes back up, dancing around. Look at that little level there, little level there, little level there. You're catching, and then boom, finally it breaks through, right? After it breaks through, first it goes sideways, then it starts to flush. Now, if you saw that and you know where it can go to, you could say, all right, let me put this up here or put my stop up here. I can put it even closer if I want to because it did pull back here. I can say, okay, I'll put a stop loss maybe right about here and see if I can get some good follow through, right? I'm risking at that point 18 cents. All right, see what happens. Oh, it flushes. Oh, it's still going. Oh, it's still going. Wow. Takes out some support along the way, right? Then pulls back, goes flat for a while, gets stuck underneath this seller. The reason why it disappears is because the seller below is too strong. Now it starts to go back up. Didn't get through here. Right now it starts to flush again. Comes back down once again. Doesn't pass through. Now turns the corner, and there it is. Sudden spike in volume, sudden drop in price. Natural place you can put a stop. Get back in. You have a projection of where it can go. You have a tight risk. There's where you're looking for it to go to down here. You see it already, right? At 79, you already know it's there. There it is here. And you wait, see what happens. But eventually it flushes down. Now, this is not going to say that, there's no effort or everything's going to work. I'm just saying that if you have this in front of you, then it will be a lot easier to manage these type of trends, like these type of opportunities. It's a lot. I mean, you're going to have, two book maps running, and I admit that you won't be able to watch too many things at once. Oops, didn't mean to do that. You won't be able to watch too many things at once, right? Probably only one stock at a time. But if you know it's looking like a pretty good opportunity, and you want to make sure you get the most out of it, this is one way you can. Okay. My point is, you can recognize when it's hit some sort of resistance on the way up from a downtrend. You wait for it to turn the corner again. You try to get in. Your risk can be a lot smaller because you're not basing it on a 1 minute chart or a 30-second chart. You're basing it strictly on the granularity of this chart, which can be, it's not really definable. You just see there's a 5 minute gap between here and here, but it's tick by tick. So I just look at it. I know this is where I was thinking that things were going to go to. So now it gets there. And my question would be, does it look like it's going to keep going or not? Well, looking at this, it wasn't overwhelmingly selling. It's actually a mixture of buying and selling. Okay. I don't have the dots on here. Sorry. Forgot to add these. They were actually helpful. And let me change the settings here 1 second. Oh, wait a minute. Where is it? Wait a minute. What? Oh, there it is. Yeah, sorry. Heat map settings. There we go. Volume dots. Total volume. I like 2D. I don't know why people like 3D, but who cares? All right, so this is kind of a mixed bag. It's not all selling. It's more selling than buying. That's a given, but not that crazy strong. So we know there's some buyers there, and sure enough, they start to push back. It's going back and forth. No strong follow through. Not like more sellers are piling up. So we know this probably will go backwards, and it does, right? So if you have it zoomed in, you will be able to see a lot more of the action. And you should be able to use that to your advantage to get a better sense of what's happening. So that's totally your call, but I would definitely consider doing that because that will allow you to squeeze a lot more out of these moves, which is the idea. Okay, the sooner I can exit when it looks like it's turning around, or the quicker I can enter when it looks like it's about to go my way, the better off that is for me. All right, I got to wrap up here, guys, since I have an appointment in about 20 minutes that I got to get to. ATRs, I wouldn't. I don't think anything can be that will really be added to this will be very beneficial. It's just what you see is what it is. Okay, so this is not a technical study type of deal. You're just looking at what the order flow is saying, looking for places. I mean, remember, this is what causes the movement. So if I'm only seeing that and I'm not focusing on anything else, I'll get a much better sense of what's going on. I give you targets just to give you a projection of how far the momentum might carry something, but that's it. Once we have that information, it's just a matter of looking at the orders, where they are, how they're playing out, and basically making sure that I'm not trading against that. Like I want to make sure I trade in its favor. Okay. All right. A lot of times when you are about to turn the corner, let me see if I can show you an example. Okay, there's that one's actually not bad. That's a pretty clear sign that the momentum is actually being um, overwhelmed. So it still went up, but you suddenly see all. So this is like someone stabbed the brake, basically. Um, you see these? That's a good pattern. You see these big clusters, big seller there, more selling, more selling, more selling than buying. Notice that this is going down, down, down quickly. That shows a lot of follow through. People want to sell. They want the stock to go down. All right. Here's another example. Pulls back. Suddenly you see a sharp selling increase, and then it turns after that. Yep. There's another one. Goes up. Big seller suddenly clusters in right there. Turns the other way. You guys starting to see what I'm saying? Like, is it starting to make sense? What I'm seeing? The pressure suddenly kicks in, and suddenly you look, and suddenly the stock starts to turn. Okay, it's not guaranteed to turn, but a lot of times it does. So these dots, again, this is the net difference between buying and selling pressure. So if you suddenly see an overwhelming, these two dots, these are buyers, right? Because it's under, if it's underneath the price, that's a bid. If it's on top of the price, it's an ask. So these are bids. We're heading to them. So the market's seeking out to keep going towards these bids. And when it pulls away, the turning points almost always occur when there's a sudden spike in selling pressure in the case of a downtrending stock. Oftentimes it goes up against a resistance level, things turn around, right? These are the norms. This is what usually happens, guys. Okay? As with all things, nothing works perfectly, guys. Okay? No matter how long you do this, you're going to see a lot of times where what you expect it to happen does not happen. But what I'm saying is if you have a heads up already of what's happening in general, you get the gist that the only thing that makes prices move is the flow of orders. So if I understand that principle, I'm looking at the mechanics of price movement. So if I look at the mechanics of price movement, then I get what should happen. So if something is running into, you know, sorry, if something is running into, sorry, 1 second, contractor pay for week ending 1/24/2025. Okay, done. Yep. No address needed. All right, done. Okay. Sorry, I just had to pay an employee. So as I scroll, you can clearly see, like you see the pressure of selling is here, more red than green, right? This one had a huge seller, but it's at the bottom of a move. So when this seller hit this buyer, they basically neutralized each other. The stock, for whatever reason, didn't want to go any lower. There's no follow through. There's not other dots below it to keep the movement going. It starts to go this way. So I can see that as it happens, right? Here's one that knocks through this support, notice. In this case, it goes sideways for a second, then it resumes over here. So I can see this one is not getting the pushback. It's getting the follow through. Not more big sellers, but it's not getting any people pushing the other way. This one up here, same thing, goes up. You did have a buyer here, but it didn't seem to matter. But goes up, hits the seller, goes sideways, goes down, comes back up, goes down, but you can see the support there, so you probably want to wait till that gets taken out since you're entering pretty close to it, right? Here's another one, pulls back after support, pressure starts to kick in, goes back the other way. Now, I'm not making this up, guys. I'm just scrolling, but you can see this stuff is real, right? This actually happens. So you don't want to obsess about it. You just want to basically look, and if you see it go up against an area of resistance, okay, I don't see one right now, but over here you see a lot of it, uh, right? So when you go up against the resistance, it should be buying at first. That pushes you through the resistance, like here. Should be more buying because you got to get through it. And then after that, the buyers are exhausted, starts to come back down, right? So if I understand, if I know where the market is at the time, there's another example. More buying than selling, right? But it's not enough to keep going. There's no follow through. It gets weaker, but we know the downtrend is there. We can see the big picture. So when we get these pullbacks, we look for opportunities to sell on the pullback. All right. All right, guys. We'll talk more about this in the next session, but I'll upload this video in a little bit, okay? But get the general idea that all that's happening all day is there's a tug of war going on between buyers and sellers. If there's an obstacle that's standing in the way of one side, it's going to impede that side's ability to move, right? But ultimately, that's all it is. The market's just one big tug of war. If you understand which side is the dominant force that has the most power, then you can understand which direction the market's going to get pulled. Okay? All we have to do is wait for the right setup and then go from there. All right, guys. All right. If you use BookMap, why don't you look over this over the weekend? And otherwise, if you don't have BookMap, get it. Okay? All right, folks. I'll see you guys on Monday. Have a great weekend. We'll pick up on Monday. Take care. I'll upload this in about an hour and a half. Okay?